Welcome to the Family Financial Freedom channel. The main intent of this channel is to educate Indian families who are new to stock market about some best practices. Hello, welcome to Pearls of Wisdom from Investment Gurus. In our life, out of our experiences, we found out, say, some truths. Then when we encapsulate and try to pass on to our next generation, they will be like simple quotations or simple facts. So is in our investment journey and process. Investment in reality is simple, but we complicate it. Our legend investors in their lifetime, when they experience, experiment and come back with such simple truths, simple philosophies, and they share those secrets in terms of simple quotations or statements, why not take them, understand and use them in our investment rather than reinventing everything? That's the very purpose of this series. Hope it helps you to accelerate in your investment journey. Let's go watch today's Pearl of Wisdom from our investment gurus. Most investors think successful investing is about always being right. But our legend investor George Soros says something completely different. He says it's not whether you are right or wrong that's important, but how much money you make when you are right and how less money you are losing when you are wrong. This single idea from George Soros separates amateur investors from legendary investors. Investment is not about perfection, right? Many people think great investors predict the market rightly and win several times. That's not the true case. Even the veterans like Warren Buffett or Peter Lynch, they make mistakes, but the difference is they keep their losses small. They let their winners run and win big. You don't need 100% success rate to become wealthy. Keep that in mind. Another point that comes to my mind is the risk management. Risk management is more important than intelligence, right? Most beginners, we focus more on stock tips or predictions, targets, etc. But the professional investors, what they focus is mainly what is their downside risk, how they manage. Once you take care of this downside protection, your profits will automatically come to you. So another example is, say in a stock, if you are invested, if it falls by 50%, from here, just to be break even, you have to be 100% gain from that 50% loss. Only then it becomes your break even. Forget about any profits, right? So predicting markets, that's not important, but protecting your capital with right risk management is the first rule of investment. Big winners only will build you enough wealth. One great investment in your lifetime can change your financial future. Do you agree? There are a lot of examples that a lot of the influencers in the YouTube or social media talk about, right? We heard about how the IT stocks like Infosys, TCS, etc. made money in the last 2 decades. Not anymore, right? Similarly, the Asian Paints or HDFC Bank. We all know what Titan made to Rakesh Junjunwala, our ace investor from India, correct? So similarly, Apple, Amazon, in the recent past, the Nvidia, right? How this single stock made fortunes of money if we stay invested in them patiently and run big on them. So you don't need many multi-baggers, you just need a few big winners and the patience to hold them for long term. That's what is the key message that we need to take. And small losses are very normal, right? Even we learned from other messages. If you have not done, I've already made some small widgets, small videos from Peter Lynch and also Warren Buffett, right? Who tells you need not be 100% right. Even if 60% of your trades are good, you can make big money, and 40% are losses. So George Soros says losses are part of the game. Successful investors accept small losses, put their assets and take them. Those are all temporary failures, but they let their winners run high with substantial position. The goal is not to avoid mistakes, but the goal is to survive the mistakes, minimize the losses from those mistakes. And another thing that, as they said, right, when you are right, make it big. Position sizing changes everything. Even if you are right, if your investment is very small, right, even if it is a multi-bagger, your returns will be very small. I personally had my own example. Again, whatever stocks I'm referring, they're only for educational purposes, not any buy and sell. Back in the 4 5 years back, I bought this company called Ismo, and it has become a 5 bagger or 6 bagger. But what I invested was very small amount, 20 25,000 only. So that did not give big amount. Imagine if I put few lakhs, that could have been a very good wealth generator in my portfolio. So position sizing is very, very important. If you are wrong with uh, huge losses, ensure that destroys your portfolio. Hence, you have to ensure cut the losses at the minimum 10% or whatever, based on your investment philosophy. But if your winners are going up, let them run, and ensure your um, sufficient portion of your portfolio is allocated so that your portfolio takes maximum benefit. So finally, I wanted to say successful investing is not about proving your intelligence to the market. It is about keeping your losses small when you are wrong, and letting your winners run, and sufficiently allocate funds to your winners. Surviving long enough for compounding to work its magic is the key. That is the real wisdom that behind George Soros quote. Um, Hope this is a valuable lesson. Um, to If you need more such wisdom pearls from our investment gurus, please subscribe to this channel, and also please watch my previous videos. Hope these will enhance your investment journey and make you a better investor. We will see you in the next episode with another pearl of wisdom from market gurus.